Hello everyone, and welcome back to another weekly market update from Zylostar. Financial markets found surprising stability post an anticipated CPI report, and also despite multiple negative economic reports, we still found gold continuing to go up slightly. However, it is required to make a pullback. Speaking of stocks, is still performing pretty well. Despite all what is happening, investors are still buying bonds and stocks side by side, especially because of the tension continuing in the Middle East. And also due to that, we saw a sharp spike in oil prices going up. Let's see how that's looking on charts. Alright everyone, here we are kicking off our weekly market outlook, starting with NASDAQ. Now NASDAQ had moved to the upside beautifully as we had anticipated in the previous week. We can clearly see that NASDAQ created for us a beautiful bullish pennant pattern with a retracement to this minor support here, especially to this price range after that breakout, which this candle I had spoken to you guys about a few weeks ago, considering it to be a doji, and it gave us confirmations for a long entry on a lower time frame compared to the 4 hours for a long entry. If you missed that, there's also that bullish flag that created on a lower time frame, giving us a beautiful entry for a breakout trade targeting this resistance, which exactly is where the price had went, and we saw profit booking, which caused the price to go down. Now we might see a little bit of a retracement to the downside on NASDAQ because of this bearish engulfing, a deeper retracement to the support before a continuation to the upside, but overall we're still bullish on this asset for the upcoming week. Now, speaking of CPI data, it came as anticipated in the previous week. Matter of fact, a lot of analysts were expecting inflation to go up, especially with the volatile movements of oil because of the escalating tension between Iran and US, and also the page of war between Russia and Ukraine, especially after Russia rejecting peace proposals. However, S&P 500 companies are on track for roughly 50% year-on-year earning growth in quarter 2 2026, which would be the strongest growth since 2021. And since that is there, speaking of 2021, that was the spike happening to the upside post COVID market struggle. And this gives us a reflection that financial markets, especially in the United States, are doing pretty good, speaking of stock markets and earning reports. And that in the S&P 500 also reflects positively on NASDAQ because both indices have many major stocks in common. All right, so now going into gold. Gold traders were patiently waiting for CPI data to reflect the overall sentiment, whether this asset should be bought or sold. However, CPI didn't do much to gold, so the continuation of the upward movements had continued, especially that the expectation for interest rates to be increased had decreased, and also because of the tension re-escalating between Ukraine and Russia. So that kept the prices of gold going up. However, even though technically and the way that money flows, we should have seen a retracement or a correction on gold. And that correction actually came a little bit late post gold forming for us a rising wedge pattern. Of course, we got multiple nice confirmations for long day trades on gold in the previous weeks, and also another 2 short setups that were very decent, I would say. However, gold right now is consolidating and it's in the middle of a range, and it hadn't actually continued moving to the upside despite that we got multiple negative economic reports of the dollar, including PPI, retail sales, and also job data. Still, gold didn't spike up sharply, and that is because of oil prices spiking. So we saw indecision dominating gold by the end of the trading week. So that is about gold. We can expect a further consolidation within the range prior us getting further data to analyze and predict movements. Now, one thing to keep in mind that even though CPI came as anticipated in August, still we have another CPI to come by September. Most likely will be by the 11th of September, and then an interest rate decision to come by 16th September. So we will have another CPI or inflation data before the interest rate decision. And even though that data came as anticipated, speaking of CPI, although it's still higher than previous, which means inflation is increasing. And as I had highlighted for you guys earlier, even though we are getting negative job data, the Feds are more concerned actually about the overall inflation in the country rather than just negative job data. So if we have a positive CPI in September, which will be very, very probable if the situation between either Ukraine and Russia or Iran and US escalates, that should create more tension, increases inflation, and overall force the Feds to increase interest rates by September. So the scenario is still very probable, even though on a shorter period of time, because of August CPI data. Investors had that appetite reduced for an interest rate hike, but that might not be necessarily the case to continue. And in my opinion, actually, even though in multiple opinions here and there is still a very good possibility for interest rates to be hiked by September. All right, that is about gold. Going to EURUSD, we saw also another sort of consolidation for EURUSD. Indecision dominated that asset as a weekly basis. From here, we are seeing market creating for us an ascending channel, which suggests especially that market is at a strong resistance, that we see a retracement, a pullback to the support, and a possible further push down on EURUSD. So we are bearish on it for the upcoming week. Of course, once we get that confirmation, you could go for a weekly trade or a swing trade. Other than that, it is best for you to go for day trades on this asset, especially that indecision is dominating the market. Now, going to Bitcoin, we had highlighted two scenarios in the previous week, and I did highlight for you guys that the most probable move on Bitcoin is for it to retrace to the downside, to the support, and that is due to reasons we spoke about in the previous week. That's exactly what happened. And from here, we see that there is a solid, strong support here. Now, there are actually different outlooks, I would say, to come on Bitcoin. If the geopolitical tension rises between Russia and Ukraine, we could actually see a flow of funds into Bitcoin, and that should make the price go up. All right, if not, and we see some volatility happening because of Iran and US, we could see Bitcoin going down because of investors buying dollar to buy oil. Once again, the same scenario that we had witnessed earlier. Either ways, Bitcoin is now in still the same range I had spoken of earlier, which is 61,000 and 67,000. And matter of fact, now it's about in the middle. So it is inside two ranges. The range that should determine the trend, the range I had spoken of right now, and the other range, as we can see, between 62,500 and 65. So we can anticipate a movement to the upside to be more probable by the upcoming week. That's about Bitcoin. Going to Nifty 50. Also, Nifty 50 faced more consolidation, even though it dropped a little bit to the downside, and that is due to oil prices spiking and the lack of confidence about what may happen next. So we can anticipate further continuation in consolidation with Nifty 50 until we get more information to have a proper direction for the asset as an anticipation for it to move forward. This will be it for the upcoming week. Wish you guys a good luck with your trading. Thank you all for watching. Feel free to leave a like, a comment if you'd like to know about a certain asset, and we'll see you in an upcoming one.